Month one, I'm going to start an operation. And my operation here, and I think I'm going to go with black on this rather than to try to stick with the green. First month sales, I'm going to have $3,000. That's my estimate. So one of the things I do when I finish one column, I take the number from the ending cash of the previous column. It becomes the beginning cash of my current column. And that makes sense. Whatever money you have on the 1st of April is what you had on the 31st of March. It's the same thing. So as I make this transition, I then put up here my beginning cash from my startup phase is now negative $8,900. I then add these two numbers together, and I end up with a total now of negative $5,900. Negative 89 plus 3,000 gives me $5,900. $900. I now need to fill out this information here the best I know. If I'm selling $3,000 worth of stuff and I have $1,000 worth of ingredients and I have about a 3-to-1 margin, I'm going to use up all my ingredients. And if I expect to have more sales here, I'm going to now, for month one, I'm going to buy ingredients of $1,500. I have zero fixture cost. I'm going to begin my advertising in month one. I'm going to spend $400 on advertising. I don't have any more office expense. My insurance paid for 6 months, so there's $0 here. My communication is going to run $100 a month after that. And I'm going to fill in some of these things that are fixed expenses along for a while. So I'm going to have $100 a month in communications every month. I'm going to advertise every other month. So I'm going to do 400, 0, 400, 0, 400, because that's what I expect to spend in advertising. My ingredients are going to be based on my sales, so I'm not going to fill in any more for ingredients until I know what my projected sales are. Everybody with me so far? Okay. So I had a total expense here that was the sum of these numbers. I'm going to now sum these numbers and put a total expense number in there. I've got 2,000, 1,500, 2,500, or 3,500, 3,900, $4,000. Okay. Because I'm in startup phase, I have enough money saved that I can last for 6 months without any income. And so I'm going to put no owner's draw in here for the first few months to see if I can make it. So my total outflow for month one is $4,000. I subtract $4,000 from negative $5,900 and I get negative $9,900. Okay. So I take my ending cash for month one, bring it up to the beginning cash of month two. So I have a negative $9,900 here. And this month, I'm going to sell $5,000. No, that's too big an increase. I'm going to change that. I'm going to sell $4,000 worth of breads in month 2, I believe. So negative $9,900 plus a positive $4,000 gives me $5,900 again. Negative. Well, if I'm at $4,000 here, I'm probably going to have more like $1,800 here in terms of ingredients to be able to plan for the next month. Again, no fixtures, no ads at this point. I'm going to put in $200 worth of office products that I have to have. No insurance because I paid for it for 6 months. My communications I know is going to stay at $100. And so now I sum this set of numbers for my out-of-pocket expenses for month 2. And that ends up to be $4,100. No owner's draw this month. Total but of these two is $4,100. Negative $5,900 minus $4,100 is negative $10,000. The pattern that I've established here is most important in this bottom line. Just like Banana said, you don't get this money for free. You have to do something to make this money work, because this bottom line, when you finish your cash flow projection, has to have a minimum value of 0. These numbers all either have to be positive or 0. The reason I didn't put any beginning cash in the beginning is because I didn't know how much money I needed to start my business. But as I look through each one of these numbers, it's clear that the biggest negative number in ending cash is $10,000. So I need to get from startup through the 5th month, the maximum amount of money I need to have to work with is $10,000. And given this cash flow, assuming it's correct, I don't start my business until I know where I can find the $10,000. So Banana, the question is, that $10,000, is it going to be a loan? Is it money that I already have? How do we get some money here to be able to cover this? And if I had a loan for $10,000 here, then I might have interest payments here that would have to put some numbers in there to modify this program. So we go through the first time, we come up with the set of expenses that we have. We look at this bottom line. We say, given the bottom line as a particular set of numbers. What do I need here or someplace in the spreadsheet to be able to make this work?